In the same year, the global pandemic hit the world. Investor, entrepreneur, and active money manager Cathie Wood, who was struggling to make profit just 5 years ago, with an overall asset of little over $40 million, has turned into the world's biggest moneymaker by putting our money where our mouth is.
Tesla is one of the most maligned stocks in the stock market, and I'm one of the most trolled portfolio managers on Twitter in the world because of Tesla.
With ARK's Invest current public portfolio skyrocketing to a whopping $16.9 billion in 2020. How did she do it? How did this young New York-based intern turn into the world's biggest moneymaker of the 21st century? Beating Wall Street, beating the S&P 500, and breaking world records the likes of Warren Buffett will be proud of. You are about to find out. Welcome to Galactico. This is a channel committed to bringing you the very best of information and key nuggets from Galactical individuals and businesses, showing you how they got there, and most importantly, how you can get there too. If you are not subscribed yet, then you are missing out. Kindly hit the subscribe button and let's dive in. Born in 1956 and growing in the suburbs, the young Wood went on to study finance and economics from the University of Southern California. As an economics student at the University of Southern California, she studied under supply-side guru Arthur Laffer, an apprentice from 1977 to 1980 at Los Angeles fund giant Capital Group, carefully watching as interest rates approaching 20% crushed the economy and the market. Soon after graduating in 1981 summa cum laude, she joined Jennison Associates, now an equity investment arm of Prudential, as an economist in New York. There, she made an early call that inflation and interest rates would peak. That garnered eye rolls from her superiors, but Wood was right, and that experience piqued her interest and made her believe she could go against big and established consensus and still end up being right. Frustrated with her career path at Jennison and wanting to research individual companies, Wood decided to quit. Her mentor at the firm persuaded her to return the following Monday and moved her into equity research. In 2001, she moved to New York-based firm AllianceBernstein as Chief Investment Officer for thematic portfolios. But the 2008 financial crisis ushered in an era in which active managers underperformed the S&P 500 and trillions flooded into low-cost index funds. Wood knew she had had enough of this uncertain terrain and decided a fresh approach was needed. By 2012, she had formulated a new way of approaching the publicly traded market and proposed putting actively managed portfolios of innovative companies inside an ETF structure. The idea was tossed aside, put under scrutiny, and got nowhere at AllianceBernstein. Cathie always had a thing for shaking things up. So in 2014, after a 12-year career at AllianceBernstein, she decided to break away and build her own firm, focusing on innovative companies disrupting the status quo. The move was not received warmly by our entourage. Many of my best friends thought I was going to fail, and they told me that because they wanted to protect me, Wood recalls. But I never thought I was going to fail. There was a huge unmet need, and that's the best way to start a business. Few months later, she would launch ARK Invest in New York. Her goal for ARK was simple: identify large-scale investment opportunities resulting from technological innovations such as robotics, big data, machine learning, blockchain, cloud computing, and DNA sequencing. Success wasn't immediate. In the firm's first 2 years, its flagship fund consequently ranked in the bottom quartile of its peer group. By the end of 2016, Wood had attracted just $307 million in assets, and ARK's very low management fee wasn't covering for overheads either. To keep the vision going, she dug deep in her savings, sold minority stakes, and struck partnerships with larger firms to build distribution. In August 2017, Japan's Nikko asset management firm invested in ARK Invest for a 15% stake of the company at an undisclosed fee to foster a long-term approach of new-age disruptive investments. Prior to that, the mutual fund firm American Beacon had also invested, with both firms now owning 39% of the company and about an additional 10% stake being owned by the firm's 24 employees. With the investments in place and distribution sorted, by 2017, ARK took off, buoyed by surging prices for stocks like Netflix, Salesforce, DNA sequencer Illumina, digital payments processor Square, and digital health provider Athena Health. Assets rose tenfold, and ARK began to build its brand on the back of bold predictions, an active Twitter presence, and the free research it put online. It also attracted notice for a cryptocurrency fund available only to accredited investors. Wood started buying Bitcoin, which she calls an insurance policy against inflation, in 2015 at $250 a coin. Investment philosophy. Prior to the year 2020, things were moving pretty good for ARK Invest. Then the tumult of 2020 came, and this proved really fruitful for all of ARK's investments. In March, when the pandemic emerged and stocks plunged, Wood correctly predicted fast-growing tech companies would lead the world and financial markets to recovery. She concentrated ARK portfolios in Tesla and other top picks including education software company 2U and real estate platform Zillow. Then, in late summer, when Tesla soared, she trimmed her holdings and built a large position in the battered shares of Slack. Cathie Wood has always taken a top-down approach to building portfolios, first identifying disruptions by any means possible, including crowdsourcing. She even opens the firm's Friday afternoon research meetings to outsiders who can call in via Zoom. Economics is central, as she has always believed, and Wood is most bullish on innovations if she believes their cost will decline over time, creating real demand. An optimist by nature, Wood nonetheless offers some unsettling predictions for the next 5 years. She expects large industries, banking, energy, transportation, healthcare to be disrupted by technological change, with many workers displaced. The result, she believes, is that economic growth, inflation, and broad market indexes will all fall persistently short of expectations, providing an opportunity for active managers to pick the innovative winners that will continue to drive market cap gains. Wood learned the power of what she calls convergent technologies, and she views Tesla as a convergence. The reason auto analysts have made mistakes is that they are not the right analyst for this company, says Wood. This philosophy of convergence has shaped how ARK is organized, how it thinks, and how it hires analysts. Instead of covering specific companies, it focuses on areas of tech that span across sectors. ARK doesn't plunk analysts from MBA schools or Wall Street gurus, but instead prefers those with tech or industry experience. The investment process starts with Wood and her team of analysts, researching and sizing up the opportunities in each of the 5 fields without referencing any indices or screens. Once the team has identified which stocks are best positioned to capitalize on these opportunities, it draws up its bottom-up forecasts, investment briefs, investment theses, expected rates of return, and other financial metrics. It also develops a 6-point scoring system based on measures such as company culture and barriers to entry for each stock. Leaving no stone unturned. ARC also distributes its research and white papers on social media platforms such as Twitter, Facebook, and Medium. This approach has not only encouraged innovative firms to reach out to the company, but also talent with specialized knowledge. The big break, striking gold in Tesla. Wood has made headlines for many of our ideas, but perhaps the most controversial one is her bet on Tesla. The electric vehicle maker is one of the largest holdings in several of ARC's fundings, including the ARC Innovation ETF. Tesla stock was trading at around $285 as of mid-March 2019, but Wood believed that the firm could reach $700 per share in 5 years' time. And that is just her bear case. Her bull case for Tesla is a whopping $4,000 per share. It sounds like a big number, but if we are right on the bullish case, then Tesla is not just an EV manufacturer. It is an autonomous vehicle platform provider. It is a completely different model, Wood says. And we also truly looking at it, Tesla is much more software-centric than most people realize. And software engineers, who are in short supply, all want to work for Tesla. So Tesla is taking all the oxygen out of the room for the other automakers and getting all the really great software engineers. Aside from Tesla's software advantage, Tesla, as a company, has a vast growth potential in China, which is using electric vehicles as a way to tackle air pollution. The fact that big retailers such as Walmart and Costco are now switching to electric trucks as a positive sign for Tesla, which has not yet entered the autonomous trucking space. If all the facts about Tesla's autonomous vehicles predictions are right, then she believes that the $4,000 price target is a conservative one, because it doesn't include any autonomous platform in China. It's just the electric car sales, she says. It is one of the most exciting stories in the market, but it is also the poster child for fear in the market today. Innovation scares people because it is an uncharted territory, and money is involved considering the volatility also. And as Cathie Wood always believes that volatility can be a good thing on the upside. Tesla $1 trillion plan. The carmaker plans to launch a ride-hailing network to compete against Uber and Lyft. If it does that successfully, it will be able to provide drivers with cars. The total cost of ownership and operating will be about 1/3 less than a Toyota Camry. It's going to be a win-win situation. Drivers can pay $5,000 down and work the rest of the car off by driving it, while Tesla gets the data that the driver delivers every day for its artificial intelligence engine when the world goes autonomous, unlike drivers who were working for Uber and Lyft, who will be left out of the party. Tesla's ride-hailing network of drivers will own an autonomous car that will work for them, thereby turning every Tesla car owner to entrepreneurs. This is a huge economics of both scale and magnitude, and Tesla could just be riding on the wave of the world's most valuable companies. If Tesla pulls this off, it will be so much more profitable than just building cars. Electric vehicle margins are in the 20% range. Ride-hailing is probably in the 40s, and software as a service and autonomous vehicles will be in the 80s. This is a margin structure that most auto analysts have never seen. This big projection of Tesla has prompted ARC to invest over $672 million into acquiring Tesla shares early on in the year, which makes up about 10.97% of their total portfolio in the publicly traded market. Cathie Wood is one investor we love so much, and we are keen to watching her grow on the long run. Her philosophy of investments is based on sound and intelligent analysis of disruptive ideas of the coming decade. Starting a company from scratch is no easy feat, and has thus far made it a billion-dollar company in just little over 6 years is even a more remarkable achievement. With our guidance, we think that any stock she has in our portfolio is worth looking into. We ourselves hold on to Tesla stock, and we continue to remain bullish as we can see the same potential she sees, and we believe that many can learn a lot from this Wall Street queen of investing. Thank you for watching to the end of this video. We sincerely appreciate having you here. Kindly please hit subscribe button if you haven't. Also, drop your comments and tell us which was your biggest takeaway and which of ARK Invest top stocks you are looking to invest in. Feel free to smash the like button right now and share to your friends and family. We sincerely appreciate your kind gesture. Till next time, remain a Galactico.